Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com, and welcome to today's morning call. So today you wake up, you turn the TV on, and you see the futures up 8-9 handles. How can that be? Wars escalating in the Mideast. You have all the problems with Israel and Gaza. There's still no end to the fiscal cliff. People are still talking about Greece not getting, their package approved. Meanwhile, we had a really nice reversal on Friday, and today we're getting some follow-through. This means a lot to technicians. This is why you watch the morning call. Friday, tried to tweet about it. We talked about it, looking for a reversal setup. When are we going to finally get that reversal? When are we going to finally get a valid day one? And we still don't know if we have it yet. That's why we're going to measure the next few days. We feel like it's very, very important. We try and time the markets here. We try and teach you how to time the markets. You take a look at the chart of the SPX, you will see, if you remember from the June 4th low that started here, back in June, we've had a nice trend to the upside besides before, again, getting some of this faulty action right near the upper level. Technology started to weaken, things start to deteriorate. This is when the trend broke. The trend broke. When trends break, you sell, especially if you're an intermediate trend trader. And this was back, on October 19th. And from there, that you're talking about from 1440, which you could have had a nice exit. Listen, no one ever really sells at the top. It's very hard to be a seller of 1474, but you're able to measure the action along the upper level. And this is when we broke, came back, retested, and then from 1430, it's been a pretty harsh move to the downside. Okay, we've came 5% more lower after the president got elected. When President Obama got put back in office, look what happened here. Then we went right to the fiscal cliff. From there, we continued to the 200-day, which we broke, and then finally down on Friday, we went below the low from Thursday, which was 1348, putting the low at 1343 and closed strong. So the question is, why did that mean something? It means something to market timers. It means something to people who try and maneuver these ranges and want to look for clues whether or not things change. I call this the red dog reversal. We call it an outside day. Some people call it a hammer bottom. And you never truly know where it's going to go. But if you switch gears on that day, it's really good for an active trade if you put the trade on Friday. And typically you do get some follow through. So here's your 8-9 handle. So the question is, do you take some off into that trade? Which I do think you could trim and trail some, but I do think you stay with it because we became so far depressed to the downside that we could see a better bounce. So now if you look back at the chart, you will see that we've had these type of outside reversals in the past. So here's a bit of a macro view. Okay, if you remember the October 4th outside day, it was really a harsh day. Okay, I want to show it to you a little bit closer here. This was when, the world was starting to fall apart. Everyone thought we were going to break 1100. We went below, came back above, and that was your outside day on October 4th. From there, you had a few days to the upside. You saw some demand real quickly at those lower levels. You saw some shorts get squeezed. You saw some commitment to it, and it led to a nice move through November all the way up to about 1300. Okay, and then from there, obviously you've seen these patterns before. I've shown you too many things. Here was the wedge. There's your first quarter move, head and shoulders top. And then what happened here? You had an 8-9% correction to the downside, and then you had another outside day, which changed the direction of the market. Happened right here. Right here was your traded through the low of, what was this, 1277, came back above it, and then you had a quick move to the upside, showing some pent-up demand, and then what happened? It digested and held higher. Okay, so right there you saw two different things happen. If on those outside days you took you come back to me, all right, you saw some follow through the first few days after the outside day, and then you saw them hold higher, showing commitment before finally getting a follow-through day, probably on day 4 through day 7 to confirm a new trend. So if we go back to the chart again and you look at what happened on Friday, so far this is all we know. Okay, you take a look at Friday, it doesn't look like much right now, but here you are, outside day number 1. Today we're opening up about 8-9 handles. It would be very interesting if finally we could, close higher, where the shorts can't fade this gap up, that we see some type of gap and go. That would show you some commitment to this. Here is a level of resistance coming in around 1373 to maybe 1381, or just say 1377 to 1381. That is where the 200-day moving average comes into play. So with that said, I talk about the quick snapback. this would be the quick snapback. This would be an area that if you're really not committed and you got long on Friday, you want to sell some, okay. But then if we get to this area and go sideways, okay, and we don't pull in and you see some commitment and we start going to this side of the envelope here, and then we start to get above this area, okay, then maybe we see a bigger rally. So we go sideways, we hold above it, then your next level comes in around 1403 to 1407. So as of right now, all you have is a day and a half trade. What you want to do is see some sideways commitment and then see some follow through in day 4 to day 7. You see a nice 1.5%, 2% gain, and then perhaps that gets us underway, and that could take us, for a few weeks into Christmas, maybe year end, who knows. But as of right now, very important day to take notice. Friday, great day if you were short to switch some gears. Great day if you're looking for an entry to buy when we reclaim Thursday's lows, put a stop in at Friday's lows, calculated, defined, and now the question is, how do you measure it? So what we're going to do is check the temperature of some sectors that can give us some clues. So first sector I'm going to go into is technology, which actually led us lower, because on the S&P chart you saw October 19th is when we broke, that upward trend or that key support area. We did that well before that in technology. You look at the chart here, we broke the 50-day and this head and shoulders top pattern well before. This was October 9th. You go back to the SPX chart right here, you will see that, again, this was October 19th. Or so well after. Here's October. Actually, this was October 19th. This was almost a week and a half later. So it gave you some time and some clues to get out of the way. So anyway, you go back to the Qs and you will see this is when the first 50-day was broke, came back, retested, continued all the way down. So we did get an outside day in the Qs, and you're going to see a bit of resistance in the Qs coming in right into here. All right, so same type of scenario. I would say resistance 1, just say 63.5. I do think we get back there. We're probably even opening right around there. And then really, the bigger area, which might not be today, could be going into Thanksgiving, is right around 64.40 to watch. Okay, so right now there's a lot of resistance coming in here in technology. This was your red dog entry, so to speak, when it traded below 61.80. Okay, and went back above it. You could have bought 61.80, put a stop in at the low of the day on Friday, 61.31, and then figured out, how to stay with it, how to trim and trail it. So here's big resistance right around 64.5, and then, I'm sure we'll be going over this later this week if we could actually get there. Look at the banks. Remember I talked about high-level stops, high-level stops as well as low-level stops. So here's your high-level stop. This is when we broke about 1550. This is when the banks finally gave back the 50-day. So if you got out of the way, you wanted to look for a reversal, perhaps you got back involved here on Friday. Okay, it's above the 200-day. Banks are still showing some relative strength to the market. So now the question is, how will this bounce go? Where could it go? I'd say, probably retest right around the 50-day, right around here. So this is your quick snapback, and then it's going to have to prove that it can go higher. So right now, a bit of relative strength in the banks, not blaring, but okay. Home builders, though, actually still, best in breed in my opinion. This is when this trend line broke right around here, broke around the 25.5, came down, held above the 100-day, well above the 200-day. So this area, will be resistance on the snapback. But again, this is a group showing relative strength. This is a group that you should be looking for, key stocks to move a bit better. So right now, again, above the 100, above the 200-day, whereas the spiders and the Qs are well below. So this is a good group to stay with if you're looking for relative strength. If you want to, some people are looking to IYT. I still, don't think there's much opportunity there. It's a choppy mess. Look at this choppy mess. It's just not for me. I don't think it's for traders. I would just not really focus on that. Some guys want to talk about gold. Gold, did hold higher. If you remember, coming into this area, 1800 now, it was very big resistance, and that's when it started to go sideways and we lost those upper moving averages, came back, tested the 200-day, came back above it, did hold a little bit higher. So looking right here, here's your micro range in the middle of this area. So right here, I would say if you're long gold, what would be constructive is if the GLDs can get above 168.50, and hold above it, then perhaps next time it tries to get through 1800, it could do it with some authority. But for right now, it's still in the middle area. Here's your middle, just a channel, so to speak. Did hold above the 200-day and whatnot, so holding up relative strength-wise. And here's your line in the sand. Let it get above this 168.50. Let it prove that it could stay above it, and then perhaps it makes an assault on this upper resistance area. So when we come back after this commercial break, I'm going to jump into the trenches with some key stocks showing relative strength that you could put your attention to for some cash flow and maybe even more. Stay tuned.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to go into the trenches, and we're actually going to start with Apple and show levels that you need to watch resistance-wise, and after this 200-point move to the downside, potentially where this bounce can go to. If you take a quick look at the chart of Apple, you will see, I talk about this all the time. Here is that topping pattern that took place, in September and October. Here is where we lost the 21-day moving average, actually right around there, 681. I've talked about it since I'm blue in the face. Not a lot of faith in this move down, so a little Freudian slip. But anyway, it hit the 50-day feeble bounce, hit the 100-day feeble bounce, didn't even bounce off the 200-day, but finally you got your massive reversal in Apple. If you go to your basic studies and put the volume in, I want you to see something here. It actually happened on very big volume. I think, 45 million shares or so traded. Look at the size of this volume. Broke through key longer-term resistance and came back above. So what that did is it stopped a lot of people out. So what you have here is your classic red dog reversal. I tweeted on Friday what the strategy would have been. It would have been to buy 522 when it reclaimed it. You had to put your stop. I know it's far down. You could have kept it tighter at 505.75, and that is your red dog reversal strategy. So here is going to be a decent resistance. I remember we tried trading it against this 533 area. So I would say for today, a win would be if it can close above 532 to just say 535. If it could get some follow through and show some power and take out this area, I do think ultimately, potentially through Thanksgiving, maybe Christmas, it fills this gap and retests this 580 area. Now, I know it's not 700, it's not new highs, and who knows, maybe one day it'll get back there. But for right now, the trade is, the direction could have changed right here. One, great for an active trade. If you went long on Friday, you could sell some into this resistance and then see if it can go sideways, hold some commitment, and then potentially get to this upper area, which would then be a real dog fight between the bulls and the bears and Apple. But for right now, finally, a key little reversal pattern. Here's resistance 1, and much bigger resistance comes in, right up there. So it'll be important for the NASDAQ and important for the overall market if Friday's low sticks. And I think it relieves the pressure, and now we'll monitor it. Some other stocks that acted pretty well in this correction, which Apple did not, I'm just showing you because it's a key stock, Qualcomm. I think Qualcomm is something that everyone should look at. Qualcomm, is above the moving averages. It's flagging nicely right here. If this were to start to get above, just say 62.75, 62.80, I do think it continues to the upside. If you start to see stocks like a Qualcomm get above areas and actually continue and go, that is another sign that maybe the market's acting better. So I do think Qualcomm could be on your radar. Also Facebook. Talked about Facebook. I was getting ready to go on the plane Wednesday to go to the trade show. And, I was like, listen, guys, I think that the move that we saw from earnings of almost 25 all the way down into the lockup release, I think shorts could be in a little trouble. Meanwhile, it took off real quick, and now it's coming into this big area. I would say for a trade, it has come pretty far, pretty fast, but I'd rather see you try and be long versus short this area. If it were to get above 24.25, you have a pretty significant gap that can get filled all the way up to 26.73. So in my opinion, that's a good trade. And I think that the stock is trading. We've seen enough volume spikes that perhaps the low is in for Facebook, and that would actually be really good for the retail investor or those caught in the private placement or whatnot. And hopefully it'll also get a little bit more of a positive media spin, which has been so horrendous in so many different things. As far as some other high beta names, not much to report, except some did hold, like Apple was way below the 200-day. Amazon, Priceline are above. You take a quick look at Amazon, you will see this is where it just reclaimed the 200-day moving average. So I do think there's some room for a bounce back to maybe the quick move is 231, then really higher would be around 238. You look at Priceline, it did hold some of the gap. So my little thesis on gaps. This was your gap up. It's been churny to the downside since, but holding a majority of it, right? You look here, there's still some pent-up momentum in there. You have a small descending little triangle coming in here. So really, it needs to start getting above, just say 635 for it to then get in motion and test that gap up, the gap up highs there. But this is acting a little bit better. You look at stocks like MasterCard and Visa, still showing leadership quality, still well above the key moving averages, above the 200, above the 100. So this still, if it's a macro long view, it looks okay. Visa also, it's still trending very smooth, still, above the 50, above the 100, well above the 200. So as far as a macro play, it looks okay. And if a stock like Visa could break out and make 52-week highs, it'll give you a little bit of strength or some conviction that maybe this outside day on Friday is leading to some stronger stocks having breakouts versus the past, where when the action started to get faulty, what happened was you would see stocks try and break out, and then they would break out and fail. They'd use those breakouts for distribution versus clean moves. Now, as far as retail, so to speak, there's not much leadership there. Actually, Home Depot. So let's take a quick look there. Home Depot, holding up. It's been trending for 2 years since it's been my retail stock of the year. Still looks okay, above the 50, above the 100. So that's still in gear. Let's take a quick look at Target. Target, I know a lot of guys have been talking about it. It's been a little choppier. So if you go here, it's above the 200, getting a little bit tight there. I would say for Target to start acting better, it's going to have to clear this mini downtrend. It's going to have to get back above the 50-day, which is about 63.35. Let's take a quick look at one or two ags. CF is one that a lot of people like to go to. Not showing much relative strength. It's right at the 200-day. You have a descending channel right here. So I would say measure this one too, and perhaps if it were to break this downtrend that's been in place, since the highs here, you have actually a little micro area right there. So first step for CF would be to get above, just say this 200, and then it's got to get above 202, and then test some higher moving averages. So as far as the ags, they've all been pretty much on the decline with the markets, not much relative strength. But here's area number one, area number two. Let's take a quick look. I just want to see what Monsanto's doing. I guess very similar, so to speak. Held the 200-day, turned up a little bit on Friday, has a bunch of resistance right in front of it. So as of now, what you want to do is you want to see some leading stocks start to show some power. Not just get back to resistance 1 and stall. You want to see at least break through resistance 1, then maybe in the next few days get to resistance 2, resistance 3, and then stall a little bit but hold higher, show some commitment, then go through. What you want to do is you want to see some stocks try and break out to the upside, give some leadership to this market, because the problem with the market is there hasn't been much leadership. So for right now, I don't think everyone should just get excited and just start putting portfolios on. The IBD method is you get day one first. Then you want to see a little bit of a push away from that lower area, and then you hold higher. And then when you're consolidating higher, that's when stocks show relative strength. That's when stocks start poking their head out saying, you know what, put me on as swing trades, because if we do get follow through, which usually happens in the 4th to the 7th day to confirm the potential new uptrend, those are the ones you go with. So this process is somewhat long. There's a lot of opportunities along the way. Hopefully you follow me on Twitter, you follow T3 Live on the virtual trading floor. You saw midday pop up from no positions. All of a sudden I put the spiders on, I put Apple on, so all our virtual trade floor subscribers could see what I was doing. Tried to tweet about it because I was at the trade show to let people know in the Twitter sphere that we're switching some gears here. It could be a great active trade. And since then, it has been. So from here on in, now the question is the bulls have to prove that there's some commitment higher. We're going to have a lot of news this week. There's going to be more fiscal cliff talk. We're going to get some PMI numbers. Big Ben talks tomorrow. So, just take it easy. Don't be upset if you missed a Friday move into today. There should be some more opportunity. Take it slow. Tune into us on the virtual trading floor, the radio, our product flow. We'll try and keep you as closely involved as possible. So my name is Scott Redler, T3 Live. Have a great day trading. I'll see you at today's recap.